Welcome everyone to the Daily Market Wrap for Tuesday the 23rd of June. Some key developments overnight in the markets. US Treasury allowing the Iranian crude oil sales. Jack, do you want to talk us through that, please?
Yeah, basically there was a bit of uncertainty end of last week and over the weekend. There was meant to be a signing of the Memorandum of Understanding between the US and Iran Friday. That sort of hit a bit of turbulence, a few headwinds, as there was a bit of disagreement. They've sort of worked through it a bit over the weekend, and the market's just trying to get an understanding on what that means for the Strait of Hormuz and obviously the supply of oil. What has been announced is the US is going to allow the Iranian sale of oil and specifically importation into the US, which obviously secures oil supply. As a result, the oil prices have tumbled a fair bit, over 3%. So,
and is that across the globe, or have they put restrictions on any countries around that?
I don't believe there's any specific restrictions. Obviously, the key takeaway is just allowing the Iranian sale of oil. Shows probably the concern of the US that this ongoing restriction is having on the global economy. And I think their hands are becoming tied now, and it's why, despite Iranian pushback, that they're sort of keen to keep progressing this forward, mainly because the economy can't really afford for it to continue too much longer.
And some big announcement out of the UK. So the UK Prime Minister, after only 2 years, announcing that he will resign as Prime Minister.
Yeah.
So who's tipped to replace him, and what impact do we think this is going to have over the next sort of 2 to 3 months?
Yeah, so there's been a bit of turmoil in the UK that I've touched on previously since probably May, if not beforehand, about the future of the UK PM. And yesterday he did announce his resignation, and he's got to step down from the party leadership, obviously, which is a move markets sort of had been anticipating, but there was obviously uncertainty around it. The main catalyst for the announcement yesterday was the win of the Greater Manchester Mayor, Andy Burnham. He won the local election up north, and has got a groundswell of support behind him, and he's now tipped as the front runner to replace him as UK PM. So he's just been sworn in as an MP in the British Parliament overnight. There was a lot of uncertainty, which was sort of weighing on the pound sterling and also the UK equities. It seems to be a case of sell the rumour, buy the news. So it was weakening over this potential event. When the event actually happened, the markets were pretty stable. So it just shows that the price sensitivity was all around the uncertainty. That uncertainty has been removed. What it means moving forward is, as long as the status quo is kind of maintained, there shouldn't be much movement. Where markets will react and the pound will weaken is if the path for Burnham to become PM becomes rocky, if there's leadership challenges, if the timeline gets pushed out, that's when the sterling will weaken. But right now it looks like he's going to be elected unopposed over the next sort of month or so. Any changes to that is where we'll see fluctuations.
Okay, thank you, Jack. And this will be purely inter-party there. There won't be a formal election.
Correct. They've got a majority government. It's just who takes over the party leadership.
Okay. So today, a lot of manufacturing and services PMI data being released across Europe. Anything to look out for with these ones? Are there any predictions at the moment, or how have the markets already priced in these announcements?
Yeah, a lot of the predictions have already been priced in. Where you see movements, like most data results, is when the actual results differ from what's been predicted. PMI is just a survey of purchasing managers. It's the Purchasing Managers Index. Basically, they go around to companies. What are your expectations over the next month of employment, of supply, of sales? And investors use it as an outlook on the economy, how it's tracking. It's a scale of 0 to 100, 50 being the baseline. Above 50 is expansionary, below 50 is a contraction. So yeah, you use it as an economic outlook. Obviously, if you're expecting good news, it comes out bad news. That's going to weigh down on that local economy. So yeah, keep an eye out for that. In terms of actual results, they're sort of they do differ region to region. So yeah, if you're interested, certainly have a look at those today.
And some big moves over the past 24 hours. Oil again, which you briefly spoke about. So the price of oil coming down off the back of those announcements. Are we expecting that to continue once we start seeing traffic come through again?
Yeah. The price of oil is predicated on supply. So as long as the supply is starting to free up, that's when the price will come down. Global inventories are critically low. So because there hasn't been supply, countries have had to use existing stocks. They're now sort of at dangerously low levels, which is why the US is so keen to get those moving, because they're in the same boat. So as long as the supply sort of is at an adequate level, the prices should come lower, but they're so price sensitive, as we've seen, to any sort of news. So there's still got to be volatility. That's got to remain.
Yeah, hopefully it flows through to the petrol stations shortly. The UK 100, so slight increase coming back, presumably off the back of the PM announcement.
Yeah, it was basically removal of uncertainty. Markets were toing and froing what might happen. They've now got sort of an indication of what will happen. And so equities love certainty, and they've got a bit more of that. And also with the US-Iran sort of progressing, once again, that's taken a bit of the geopolitical tensions out of the play.
And on the UK 100, how are we seeing the impacts of the tech/AI boom? Is that as prominent in the UK as it is obviously in the Nasdaq and over in the US?
Yeah, it's probably not as prominent. The UK is probably more similar to Australia in terms of the banks and the financial sector make up a big portion of it. So a lot of the strength yesterday was the banks getting a bit more certainty, which they thrive on. So it's probably more similar to Australia, more so than the US with their obviously massive tech exposure and huge companies.
Okay, thank you. And the euro dollar continuing to fall over the past 4 or 5 days.
Yeah, we'll look at this in chart of the day in a bit more depth, but yeah, just continue its decline. Still off the back of the Fed announcements last week of probable rate hikes.
And the VIX, so the volatility index, which we've spoken about a couple of times, just a bit of a blip there overnight.
Yep.
Obviously, on the back of those announcements again, why is this index so I guess sensitive to those announcements?
It's so sensitive because it's a forward-looking index, so it's trying to predict what may happen. So it's basically the index is showing the 30-day the probability of the S&P 500. So it's looking at sort of uncertainty for the S&P over the next 30 days. So any news announcement obviously has a forward-facing effect, which is why it does blip up and down, and was reacting to the oil story last night. You can see though it is a lot lower than it has been. It's below the 20, which indicates stability. So whenever that uncertainty creeps in, that's when it will start rising, but it did seem to level out yesterday.
Okay. And back to the euro dollar for the chart of the day. So do you want to just explain, I guess, to the audience what what traders might see when they're looking at a chart like this, and how they might look to place orders, etc., on the back of some of these charts.
Yeah. So this is the chart of the euro dollar for the past month since the start of June, and what traders will look at that. Some traders like fundamental analysis, which is looking at broader economics, what governments are doing, what the market commentary says. Some traders like technical analysis, which is purely looking at the charts. What are the patterns? What are the indicators saying? Where's the momentum? And some traders, and probably the best overall strategy, is getting a mixture of both, having fundamental analysis supported by technical analysis and vice versa. Looking at the Euro USD, fundamentally what's happening, the US Fed last week said they came out with a hawkish tone looking to increase rates moving forward. That's got to boost up the US dollar, which obviously will drag down the Euro USD. On the Euro side, the ECB, which is the central bank that sets the rates regarding the Euro, they're unlikely to probably tighten as much as the Fed that the markets are predicting, because the US-Iran conflict's sort of easing now, which would take the sting out of inflation. So there's not as much need to increase rates. So that divergence will sort of drag down the Euro USD. On the technical side of things, which is looking at the chart itself, we can see there were lower highs. So when the price goes up, it will naturally come back down, try and go up again. When it doesn't reach the height it went previously, that indicates that the buyers are sort of fatiguing and more sellers are starting to work into the market. We saw that big drop last week, which was on the rate announcement. It hit that lower pink line as a support level, went above it. When it dropped back below, it couldn't break above that level. That flipped to resistance, and so now the sellers are dominating. Those squiggly lines you can see are the moving averages. That's just the price over the past 50, 100, 200 days. They're all heading downwards. And the RSI is also very low, indicating selling momentum. So all that paints the picture that the Euro USD is still heavily under pressure, bearish in its outlook, which means the price is probably going to head lower moving forward.
Okay. Thank you, Jack. And the article of the day, who is Andy Burnham? What's this one about?
Yeah, so this is just looking at who's the front runner to take the UK PM job, and how markets might react to him coming into power, what he's said in the past, what his policies might be moving forward, and sort of what the transition looks like.
All right, perfect. Thank you.
Thank you.
Cool, thanks.